In Nigeria, the Commission Chief Executive of the Nigerian Upstream Petroleum Regulatory Commission, NUPRC, Engineer Gbenga Komolafe, announced commencement of the 2025 licensing round effective December 1. This was at an investment forum in London where the NUPRC's Project 1 million barrels per day additional production was launched. Key stakeholders, including CEOs of oil companies, bank representatives, and potential investors, were told that funding remained the biggest challenge in Nigeria's upstream sector, and the Commission, as a business enabler, planned to tackle this by connecting interested parties. Hello, this is Global Business Insight, where we dive into the headlines and bring perspectives to support understanding of the somewhat more challenging context. Our deep dive is on the ongoing Capital Capacity Partnership Forum taking place in London to attract investments to produce an additional 1 million barrels per day of crude, also focusing on gas. Last month, as part of its efforts to attract investments and boost oil production, the Commission Chief Executive of the NUPRC, Engineer Gbenga Komolafe, met the Managing Director and Head of Investment Banking Sub-Saharan Africa, Bank of America, that's Mr. Chuba Ezenwa, in Abuja, as NUPRC wants major investors on board and aligned with the agency objectives. Nigeria in the medium term, according to Babatunde Fashino, Executive Commissioner in charge of strategic planning of the NUPRC, wants to reduce operating costs to under $10 a barrel by fast-tracking approvals and reducing bottlenecks. Oil theft has been curbed and production has hit 1.71 million barrels per day, which includes 205,000 barrels per day of condensates. The 2025 budget, however, set out a 2.06 million barrels per day, including condensates budget, at benchmark price of $75 per barrel. Given that global oil prices have fluctuated widely in 2025 and dropped most of the time, with Brent as low as $59 and averaging about $66 per barrel, with trends of strong supply and tepid demand, of course, the trends are looking more bearish. Nigeria needs to expand its production closer to its 2005 maximum of 2.5 million barrels per day as it arrests decades of decline. Oil revenue is critical as it funds about half of the budget, and any deviation in price or production will impact fiscal stability. Oil prices gained about $1 on the impact of the latest US sanctions on Russian oil and optimism over a potential end to the US government shutdown. Although oversupply concerns limited gains. Also, sanctions on Russian oil have mellowed oversupply worries and recently helped prices, as we saw Russian oil giant Lukoil declaring force majeure at the 400,000 barrels per day West Kurna oil field, that's West Kurna 2 oil field in Iraq, after announcement of US oil sanctions on Russia's top oil firms. Following the October 22 US sanctions on Lukoil and Rosneft, Iraq had stopped all cash and crude payments to Lukoil. If Nigeria is unable to step up production significantly, revenue shortfalls could imply higher borrowing, delayed capital projects, and pressure on the naira. Debt servicing costs could be higher as sovereign risk ratings also could deteriorate. More erosion of fiscal buffers, the very last thing the Nigerian government needs. The question is, can it raise production given the capital outlays involved? And similar West African basin projections could indicate as much as $25 to $40 billion investment needed for a 1 million barrels per day capacity increase. According to S&P Global, they estimate a 1.1%, that's $5.9 billion reduction in global upstream oil and gas development spending, bringing it down to $543 billion, and that marks the first year-over-year contraction since 2020. JP Morgan, they project that all regions except the Middle East are expected to reduce capital allocation for oil and gas development in 2025, particularly in Asia, where capex is expected to decrease by 4.8%. Why are investments dropping? Analysts say that despite both investment and well activity levels going down significantly since 2014, we are seeing declining unit costs due to efficiency and productivity gains, allowing the capability to produce more oil with less investment dollars compared to the early 2010s. Oil majors are not leaving Nigeria. They are simply rebalancing their footprint to be more profitable as prices trend downwards. An investment forum is an excellent idea, but it will all come down to numbers, especially operating costs and ease of doing oil business. On operating costs, a target to go under $10 per barrel announced by the NUPRC strategic planning is laudable, almost matching Saudi Arabia's average of $3 to $10 for onshore conventional oil, well below U.S. shale basins operating costs of over $30 per barrel, and Brazil's deepwater costs of about $40 per barrel. But today in Nigeria, actual operating costs, given the security, infrastructure, and regulatory costs, range from about $25 to $40 per barrel for onshore shallow water, while deep offshore could be $40 to $49 per barrel. President Tinubu signed executive orders recently introducing tax incentives and cost-saving rewards to attract investors and to boost the oil sector efficiency. In a new order to incentivize productivity gains, 50% of the incremental government gain resulting from cost savings will be returned to investors, while available tax credits have been capped at 20% of a company's annual tax liability. The government has also issued other directives or measures to reduce oil and gas sector operating costs, to contract timelines, and the sometimes unduly burdensome local content compliance requirements are also being addressed. Investors do not move based on intentions, as there is cutthroat competition for funding, and portfolios are already moving quickly to favor lower cost basins. Angola is reported to be similar to Nigeria, as security and infrastructure challenges also add to its cost structure. Angola, however, may be ahead of Nigeria in its ability to deploy more reforms and new floating production, storage, and offloading technology, that's FPSO, to help bring down its costs. Incentivizing deployment of lower cost technologies and higher efficiencies is a brilliant idea. The issue has to be to accelerate execution in an industry that is understandably cautious in deploying new major investments, and the timelines take several years to go from exploration to production and to be fully in a production mode. In short, for Nigeria, 2025-2026 is likely to remain a tough fiscal one, with increased borrowing and pressures to increase the taxation. All this as crude oil production ramps up by, say, 2026, 2027. Also, more focus on gas and adding value through refining and downstream industries requires more incentives and de-risking for investors. The NNPCL IPO could actually be the next big thing in terms of injecting investments, as the calendar for that is further clarified and accelerated. We do look forward to that road show. To more business stories, members of the U.S. House of Representatives headed back to Washington yesterday for a vote that could bring the longest U.S. government shutdown in history to a close. With nearly 1,200 flights cancelled due to the shutdown, lawmakers are carpooling to the Capitol, while Representative Derek Van Orden has said he was making the 16-hour drive from Wisconsin on his motorcycle. The Dow Jones Industrial Average surged to a record high close yesterday, helped by progress towards ending the longest US government shutdown. Nvidia and other artificial intelligence-related companies, however, fell on renewed concerns about elevated valuations. Although SoftBank says it remains optimistic on AI, a recent $5.8 billion sale of its Nvidia stake jolted stock markets, stoking more fears that the frenzy around artificial intelligence may have peaked. Also, given the recent warnings from Wall Street bank chiefs and analysts. And in the UK, in the 3 months to September, unemployment rate rose to 5% as wage growth slowed. This has prompted traders to lift bets that the Bank of England will cut interest rates next month to boost the economy, even as the autumn budget to be announced could also affect the response of the BOE when it meets at its next MPC meeting. The print was the highest in a decade outside the pandemic period and over the expected 4.9% estimate. Shares of AstraZeneca were up 2.5%, reaching a record high after it announced positive results in a late-stage trial for a medicine treating hypertension. The giant drug maker reported to be considering moving its primary listing to America, also beat expectations in its quarterly earnings last week. South Africa's unemployment rate fell slightly in the third quarter of this year as jobs were added in construction, social services, and trade. The official jobless rate stood at 31.9% in July to September, down from 33.2% in April to June. Nvidia supplier and the world's largest contract electronics maker, Foxconn, said Q3 profit jumped 17% from a year earlier, driven by growth in its artificial intelligence server business. German inflation slowed slightly in October to 2.3%, confirming preliminary data. The latest inflation or consumer prices harmonized to compare with other European Union countries also stood at 2.4% year-on-year, while monthly inflation remained at 0.3%. Alphabet's Google is investing $6.41 billion in Germany in the coming years as it expands its infrastructure and data center capacity in Europe's largest economy. The plan includes a new data center in Dietzenbach and expansion of the US company's site in the city of Hanau. The European Union have agreed to simplify the Common Agricultural Policy, which provides cash to European farmers. The reform would cut bureaucracy by easing environmental rules and reducing the number of inspections farmers undergo, among other things. The simplification could save farmers up to $1.9 billion a year. Nigeria's anti-narcotics agency is working with its US and British counterparts to investigate the origins of a $235 million cocaine shipment seized at Lagos Tin Can Port in one of the country's largest drug hauls. The National Drug Law Enforcement Agency, NDLEA, said in a statement yesterday that 1,000 kilograms of cocaine was discovered in an empty container at a terminal over the weekend. Stocks were mostly higher in Asian trading as the US Congress looked set to end the federal shutdown and traders looked for direction amid lack of clarity in the absence of clues from government data services. In early morning trade, oil prices softened amid expectations that an end to the longest ever US government shutdown could boost demand. Brent crude futures slipped 0.34% to just under $65 a barrel after gaining 1.7% yesterday. Well, that's it on this episode of Global Business Insight. This is Bode Oshosami. Bye-bye.